What if I told you that most of what you think about money is wrong? Money isn't actually created by governments. Money isn't backed by gold. And money definitely isn't supposed to lose value every single year. And yet, here we are, living in a world where your dollars buy less tomorrow than they do today, where central banks can print trillions overnight, and where most people's financial future depends on hoping that someone else makes good decisions. Bitcoin is something that changes all of that. But to understand why Bitcoin matters, we first need to understand what money actually is, where it came from, and how we got to this moment in history. I'm going to break down Bitcoin in a way that actually makes sense, even if you've never heard of a blockchain or think that crypto is just for gambling and criminals. Buckle up, because in the next 10 minutes, you're going to understand money better than 99% of the population. Let's start with a very basic question. What is money? Most people have never actually thought about this. We're born into a world where green paper has value because, well, it just does. But money is simply a technology, and one of the oldest technologies in all of human history. It's a tool that we invented to solve a very specific problem, called the coincidence of wants. Imagine for a moment that you grow apples and your neighbor makes shoes. You need shoes, but does your neighbor actually need apples exactly when you need shoes? Probably not. And this is where money comes in. It's a medium of exchange in a way that you could trade with anyone at any time, even if you don't want what they have. Throughout history, humans have used all kinds of things as money, from seashells to giant stones to salt, cattle, and even glass beads. But over thousands of years, we kept coming back to one thing: gold. Why? Because gold has specific properties that make it excellent money. It's scarce, you can't just create more gold out of thin air. It's durable, it doesn't rot or rust. It's portable, you can carry meaningful value on your person anywhere in the world. It's divisible, so you can make smaller pieces of it. And it's fungible, so that 1 ounce of gold is the same as any other ounce of gold. But the problem with gold is that it's heavy, it's difficult to divide precisely, and it's hard to verify quickly. Try buying coffee with gold dust and you'll see what I mean. This led to paper money, and originally, paper money was just receipts for gold held in a vault. It said, "I promise to pay the bearer on demand X amount of gold," and that used to be written on dollar bills. That meant that you could exchange your paper for actual gold, until 1971. When President Nixon severed that final link between the dollar and gold. And suddenly, the dollar wasn't as good as gold. It was only as good as people's faith in the US government. And here's where things get interesting, and honestly a bit disturbing. Since 1971, all major currencies have been what economists call fiat money, from the Latin word meaning "let it be done." It has value because the government declares that it has value, and that's it. And what happens when money isn't tied to anything scarce like gold? The answer is that governments print more of it, a lot more. Since 2020 alone, nearly 80% of all of the US dollars in existence were created. And if you think about that, it means that 4 out of every $5 were created out of thin air in just the last few years. This isn't a conspiracy theory, this is just how the modern financial system works. When you have more of something, each unit of that something becomes worth less. And that's why a dollar today buys you about 85% less than it did in 1971. Your grandparents could buy a house on a single reasonable income. Good luck with that today. This system is designed for one thing: inflation, meaning that your money loses value over time. The Federal Reserve actually targets 2% inflation per year. That means that if you keep cash in a savings account at nearly any bank in America, you're guaranteed to get poorer every single year. But wait, it gets even better. Who gets access to this newly created money first? Well, the answer to that is the banks, financial institutions, and those closest to the money printer. By the time it reaches regular people, the prices on everything in the economy have already risen. And this is why wealth inequality keeps on getting worse. It's not just free markets at work. It's a monetary system that systematically transfers wealth from the many to the few. And this is exactly the problem that Bitcoin was designed to solve. In 2008, as banks were being bailed out with taxpayer money after gambling with your savings, someone using the pseudonym Satoshi Nakamoto published a 9-page paper titled Bitcoin, a peer-to-peer electronic cash system. The timing of that paper being published wasn't a coincidence. And the first block of the Bitcoin blockchain actually contains a headline from the Times that said, "Chancellor on brink of second bailout for banks." Satoshi's goal was ambitious but clear. Create a form of money that didn't require trust in central authorities like banks or governments. Money that couldn't be devalued through inflation or seized without your consent. The genius of Bitcoin isn't just what it does, it's how it works. For the first time in human history, we have something with absolute scarcity. There will only ever be 21 million Bitcoin. Ever. No exceptions. Unless we need more. Not 21 million, but we can create more if there's a crisis. Just 21 million. Full stop. Imagine if gold worked this way. If we knew with mathematical certainty that there were only 21 million pounds of gold in the universe, and no more could ever be discovered or created, then what would that gold be worth? This is why some call Bitcoin digital gold, but that actually undersells it, because Bitcoin improves on gold in virtually every way that matters for a monetary system. Now, I could spend hours explaining the technical details of how Bitcoin works, including the blockchain, cryptography, proof-of-work mining, but here's what you really need to understand. Bitcoin is a decentralized network of computers all running the same software and following the same rules. These computers, called nodes, maintain a shared record of every transaction ever made. This shared record is the blockchain, and new Bitcoins are created through a process called mining. Miners are using specialized computers in order to solve complex cryptographic hashes, and when they solve one, they earn the right to add a new block of transactions to the blockchain and receive newly created Bitcoin as a reward. This mining process gets more difficult over time, and the reward gets cut in half approximately every 4 years. This is called the halving, and it's why Bitcoin's issuance rate keeps dropping until we reach that 21 million coin limit around the year 2140. The key innovation here isn't just digital money, because we've had that for decades. The key innovation is digital money that can't be copied. Before Bitcoin, if I sent you a digital photo, I didn't really send you anything. I just made a copy. You and I both have the same photo. And this is why digital things typically have little value. Infinite copies means no scarcity. So Bitcoin solved this double spend problem without requiring a central authority. So when I send you Bitcoin, I'm not sending you a copy. I'm transferring actual ownership of a scarce digital asset. And the entire network agrees that you now own it and I don't. So why does any of this matter? Because for the first time in history, we have money with perfect scarcity, meaning no more can be created beyond the program limit, open access, so that anyone with an internet connection can use it, censorship resistance, so that no government or bank can block you from using it, self-custody, so that you can truly own your money without depending on third parties, as well as borderless transfer, so that you can send value anywhere in the world in minutes for minimal fees. Think about what this means for the billions of people living under authoritarian regimes or with unstable currencies. In places like Venezuela, Argentina, Lebanon, or Turkey, where inflation rates have hit triple digits annually, Bitcoin offers an escape from currency collapse. And for the 1.4 billion people with no access to banking services, Bitcoin provides financial services through just a basic smartphone. For the millions of immigrants sending money home, Bitcoin cuts remittance fees from 7 to 10% down to almost nothing. And for all of us, Bitcoin offers insurance against monetary mismanagement. It's truly a way to opt out of a system that systematically devalues your savings year after year. This isn't about getting rich quick. This is about preserving wealth and economic freedom in a world where both are increasingly under threat. Now, Bitcoin isn't perfect. The price in fiat currencies is volatile. The technology is still young, and powerful interests are certainly threatened by it. But what most critics miss is that Bitcoin wasn't designed to be a get-rich-quick scheme or just a faster payment app. It was designed to be better money. Money that can't be debased, censored, or controlled. I'm not telling you to sell everything and buy Bitcoin. That, unless you're really educated, would be irresponsible. But I am suggesting that understanding Bitcoin might be one of the most important financial decisions that you make in your lifetime. So if you're not exposed yet, Start small, learn the basics, get a secure wallet, buy a little bit on a reputable exchange, and most importantly, take self-custody of your Bitcoin rather than leaving it on that exchange. And remember that when Satoshi created Bitcoin, it wasn't to make the early adopters rich. It was to give people everywhere an alternative to a broken money system, a way to store and transfer value that doesn't depend on trusting banks, governments, or any other central authority. Bitcoin is the solution to a problem that most people don't even know exists yet, but now you do. If you want to learn more, I've put together a beginner's course with my team that walks you through everything that you need to know to get started safely. We make this course available to all of our new clients at Abundant Minds when people get started mining Bitcoin with us. And if you found this helpful, follow us at Abundant Minds for more content on Bitcoin, mining, and building wealth in the digital age. Thanks for watching. I'll see you in the next video.